Hey everyone, welcome to another episode of Investing Kev. We are on episode 86 and we are coming to an end of November, so you know what that means when it comes to Chinese stocks. We'll take a look at a summary of 10 Chinese stocks who had their earnings report this month, as well as some news related to China. If you like this video, please give it a thumbs up, subscribe, and let me know in the comments what you think about Chinese stocks. Are you invested? Alright everyone, let's get started. The first stock is NIO, ticker NIO. They had total revenues of 13 billion RMB, which is an increase of 32.6% year over year. Their vehicle sales were 11.9 billion RMB, which is an increase of 38.2% year over year. They had vehicle deliveries of 31,607 vehicles. This was an increase of 29.3% year over year and 26.1% quarter over quarter. They expect their popular ET5 sales to accelerate, and they have increased confidence in the success of NIO in the European market. They expect Q4 deliveries between 43,000 to 48,000 vehicles. This is a 71.8% to 91.7% year over year growth, and they expect Q4 total revenues between 17.3 billion RMB to 19.2 billion RMB. This is an increase of 75.4% to 94.2% year over year. The next stock is Alibaba, ticker BABA. They had total revenues of 29.12 billion, which is a 3% increase year over year. Their commerce segment revenues were at $19 billion. This was a decrease of 1% year over year. Their commerce segment makes up 65% of revenues and saw a decline due to COVID-19 resurgence, restrictions, and competition. Their cloud services revenue were at $2.92 billion, which is a 4% increase year over year. Their international commerce revenue was at $2.2 billion, which is a 4% year over year increase. Their international orders declined due to change in European Union VAT rules, ongoing supply chain issues, and Russia-Ukraine. In China, logistics revenue were at $2.6 billion. This is an increase of 26% year over year, and Alibaba announced an increased share buyback of $15 billion. The next stock is Tencent Music, ticker TME. They had total revenues of 7.4 billion RMB. This is a 5.6% decrease year over year and a 6.7% increase on a sequential basis. Their online music services grew and their social entertainment services declined. Their revenues from music subscriptions were at 2.25 billion RMB. This is an increase of 18.3% year over year. Their paying users reached 85.3 million people. This was an increase of 19.8% year over year. On a sequential basis, online music paying users grew 2.6 million. They had a decline in mobile monthly active users from 636 million to 587 million people. This is due to the churn of casual users amid competition. The next stock is Huya, ticker HUYA. In Q3, they had total revenues of 2.4 billion RMB. This is a 20% decrease year over year. Their live streaming revenues declined due to decreased paying users and lower average spending per paying user. And their advertisement and other revenues declined due to soft demand for ads. Their average monthly mobile active users of Huya Live reached 86 million people versus 85.1 million the year before. Their total number of paying users of Huya Live was at 5.5 million people versus 6 million people the year before, and they reduced their total operating expenses by 27.3% in Q3. The next stock is Bilibili, ticker BILI. They had total net revenues of 5.8 billion RMB, which is an increase of 11% year over year. They saw their advertisement revenues increase 16% year over year. They had a net loss of 1.7 billion RMB. They decreased their net loss by 36% year over year, which is great to see. Their average daily active users reached 90.3 million people. This was an increase of 25% year over year. Their average monthly active users reached 332.6 million people. This was an increase of 25% year over year. And their average monthly paying users reached 28.5 million people, which is a 19% increase year over year. Users remained highly engaged, and average daily time spent on Bilibili reached a 96-minute record high. They have plans to accelerate monetization and implement cost containment measures, such as reducing headcount, cutting sales and marketing expenses. The next stock is JD.com, ticker JD. They had total Q3 net revenues of 243.5 billion RMB. This was an increase of 11% increase year over year. Their net product revenues increased 6% year over year, and their net service revenues increased 42% year over year. JD Retail saw a 7% increase year over year. JD Logistics saw a 39% increase year over year, and their new businesses saw a decrease of 13% year over year. They continue increasing operating efficiency in core businesses. They had a 5.2% operating margin versus 4% the prior year, and they currently have 588.3 million annual active customers compared to 552.2 million the prior year. The next stock is Baidu, ticker BIDU. They had Q3 total net revenues of 32.5 billion RMB. This was an increase of 2% year over year. Their online marketing revenues were at 18.7 billion RMB, which is a decrease of 4% year over year. Their non-online revenues were at 6.5 billion RMB. This was an increase of 25% year over year. They saw a gradual recovery of online marketing business and steady growth of AI cloud revenues. Their Apollo Go completed more than 474,000 rides in the quarter. This is an increase of 311% year over year and 65% quarter over quarter. Apollo Go is currently adopted by 63 cities. This is up from 24 cities a year ago. The next stock is Pinduoduo, ticker PDD. Their Q3 total revenues are at 4.99 billion US dollars. This is an increase of 65% year over year. Their online marketing revenues and others are at $3.996 billion. This is an increase of 58% year over year. Their transaction service revenues are at $987.2 million. This is an increase of 102% year over year. And their merchandise sales revenues are at $7.9 million. This was a decrease of 31% year over year. They spoke about increasing R&D investment to further enhance the supply chain efficiency and agricultural digital inclusion. In their international platform, Temu racked up more than 5 million installs in the US as of November 21st. The next stock is NetEase, ticker NTES. They had net revenues of 24.4 billion renminbi. This was an increase of 10.1% year over year. Their games and related value-added services net revenues were at 18.7 billion renminbi. This is an increase of 9.1% year over year. Their cloud music revenues are at 2.4 billion renminbi. This is an increase of 22.5% year over year. They have an advanced pipeline right now, where they're propelling new games under development. And just recently, their licenses covering publication of several titles such as World of Warcraft, StarCraft, Heroes of Storm, Overwatch, Diablo 3 will not be renewed with Blizzard in China. This represented a low percentage of NetEase total net revenues. The next stock is Tencent, ticker TCEHY. Their Q3 total revenues are at 140.1 billion renminbi, which was a decrease of 2% year over year. Their revenues from value-added services declined 3% year over year. Their international game revenues increased 3% year over year. Their domestic game revenues decreased 7% year over year, and their social network revenues decreased 2% year over year. This was due to decreased revenues from music and games-related live streaming services and video subscription services. They achieved year-over-year growth in non-IFRS earnings after 4 quarters of decline, and they are fully compliant with China regulations. Time spent from minors decreased 92% year over year and constituted 0.7% of domestic games total time spent in July 2022. And looking at the news, COVID in China is definitely dominating the news headlines. China's COVID infections dropped for the first time in more than a week. The country said local infections, mostly asymptomatic, totaled 38,421, down from a record high of 40,052 reported for Sunday. Shanghai Disneyland said it would suspend operations from Tuesday after briefly reopening Friday. The Universal Beijing Resort remains open. Stringent COVID measures this year have weighed heavily on business activity and economic growth in China. As of the third quarter, national GDP had grown by 3% year on year, far below the official target of around 5.5% set in March. COVID measures and their implementation have varied locally, especially given the scattered nature of the outbreaks. And the next news is about China's COVID vaccinations. China touts vaccination progress as it seeks reopening path, encourages booster shots for seniors. Mainland China announced significant progress Tuesday in getting COVID-19 booster shots for people over age 80. As of Monday, 65.8% of that age category had received booster shots, and official told reporters. That's up from 40% as of November 11th. Mainland China's latest COVID controls have negatively affected 25.1% of national GDP as of Monday, according to a Nomura model. That's above the prior peak of 21.2% recorded in April during the lockdown in Shanghai. And the final news is about the PCAOB Chinese stocks auditing. The PCAOB chair Williams delivers remarks at International Institute on Audit Regulation. This is what he had to say. So in September, our teams of inspectors landed in Hong Kong to begin putting our agreement to the test. They have returned home, but the work is ongoing. As you know, while on-site work is only one part of the inspections process, and complete access means complete access throughout every step of the process. No loopholes and no exceptions. In December, the PCAOB will make determinations whether the PRC authorities have allowed us to inspect and investigate completely or whether they have continued to obstruct. Let me know in the comments what you're doing right now with Chinese stocks. I've been dollar cost averaging. I've been buying Baidu, Bilibili, Neo, and Alibaba. For full disclosure, I am long in those positions, and this is not financial advice. I would love to hear what you're doing right now. Are you dollar cost averaging or are you waiting on the sidelines? If you like this video, please give it a thumbs up, subscribe, and let me know in the comments what you think. As always, thank you for tuning in, stay safe, and I'll see you all next time.